The dollar versus Canada has seen an up and down trading day. It's trading back to the upside and above a key moving average after testing another moving average and finding support. I will unpack this pair from a technical perspective in this video, so let's get started. Looking at the hourly chart, if you go back in time and take a look at this part last week, the price traded above and below the 100-hour moving average. The market didn't know which way it wanted to go. It then decided to make a run to the upside on Wednesday's trade. The corrective moves down here came back short of the 100-hour moving average, and the price extended above the 200-day moving average. That's a green line in this chart. It looked like we were breaking to the upside here. This is the first break above that 200-day moving average, going back to, well, you have to go back to the daily chart and look at the 200-day moving average right here. You have to go all the way back to April 9th, 2025 for the last time the price traded above that 200-day moving average. So that was more a bullish move. But then what do? We started to trade above and below the 200-day moving average on into Thursday, into Friday, and the price ultimately rotated to the downside. That rotation to the downside came down to another an area that was a swing high going back to last week's trading again. That low price right here, 139.388, stalled against the high price from right here, and that was somewhat significant, I guess. More importantly, probably was that the price approached the 100-hour moving average, found support buyers again, and pushed to the upside. What do we do in trading here today? On the dip to the downside here, we came down to the 100-hour moving average, found support buyers. So the buyers remain in play, staying above this 0.3938 level, staying above the 100-hour moving average at 0.39439 would keep the bias in the upward direction. Now, having said that, on the top side, what do we do up here at the 200-day moving average? Well, we had one break to the upside that failed. We had another break to the upside here, which we're currently trying to keep the bias out going to the upside. So in the short term, if we were to stay above the 1.3960 level, we're just above it at 64. That would be the best case scenario for the buyers. Buyers staying above the 200-day moving average, basing against it, pushing to the upside, pushing toward our high price that we saw in trading last week. Before that is a 0.3978 level, and that level comes from going again back to the daily chart. This high of the swing area going back in time. It goes back further through here. This is the high price at 1.3978. So get above that level, get above the high price from last week. When we start to look toward the 38.2% retracement of the move down from the 2025 high to the 2025 low, that 38.2% retracement comes in 1.4017, and ultimately, if the buyers are going to take back more control, they need to get and stay above that 38.2% retracement. Note, it also corresponds with this high price. It wasn't 38.2 at the time, but it corresponds with this high price. Increasing that level is important. So be aware of that level this week at 1.4017. That's my look at the dollar versus Canada. Buyers are trying to make a play. We'll see if they can keep that momentum going. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.